Morning, Dan. Morning, everybody. If you want to chat with me while I'm live, all you got to do is be a subscriber. And while you're at it, you might as well hit the bell with the notifications for when I go live tomorrow and every morning before the market opens. Pretty much. Then on Tuesdays, tomorrow evening at 5 p.m. Eastern, I will go live and take your request for 30 minutes. So, anyway, let's jump into all trading involves a substantial risk of loss, especially crypto. Past performance is not necessarily indicative of future results. This presentation, intended to be informational, educational, and fun, is not a recommendation to buy or sell anything, financial instrument or otherwise, even cryptos. If you desire personal financial advice, you need to hire and consult a financial advisor who has a fiduciary duty to take care of you. Like, help you make good decisions. Anyway, so we got the financial calendar here. Jump back a week. Bank holiday this week, or today. Yeah, bank holiday week, starting out this week. And happy Father's Day to everybody yesterday. So, Juneteenth today. Juneteenth. I don't know. Saw different pronunciations online. Mostly a benign week. We do have Jerome Powell testifying on Wednesday at 10 a.m. And we have unemployment claims, which hadn't been moving the market much. And then Powell testifying again on Thursday at 10 a.m. So last time that happened, he tended to move the market a little bit. Then we have flash services PMI after the market opens on Friday, which, I don't know, that's probably not going to move the market much. But we have been quite stacked here recently. So that's the week ahead. Not a lot of economic news coming out, at least not market moving economic news. And we do have some members speaking and blah blah blah, but I don't know, their rhetoric doesn't seem to be having a severe impact on the market right now. Now, I don't know that their rhetoric ever has a true impact on the market. I think the market gets stretched one way or the other, and then what we see as catalysts, or what the mainstream media picks out as catalysts, it's hard to decouple your mind from it. So those catalysts may or may not work. That's why I like earnings. Sometimes earnings are super great and they have a great forward outlook, and a stock drops like crazy. Or, they have horrible earnings and the worst possible earnings, and we turn the bottom in a stock. These things happen all the time, and it's just part of, it's part of the sentiment, really, the subconscious sentiment in the market. And nothing moves, more like that than crypto. And we have Bitcoin here, and I pull this down. Bitcoin on a downtrend right now on the daily. It has held the roadmap line pretty well on the daily, and consolidating right here. Well, last week I beat the drum a little bit that we tend to see a rally on 3-day weekends. That's kind of what we're seeing here. Started on Thursday, turning the bottom. Friday, rallying strong. And Saturday we kind of topped out, and then yesterday and today we're just kind of hovering. But we're still below this downtrend of the highs. So what does that mean? Well, it means we got to break out above the downtrend to make any further upside. Now, if you looked at this like my roadmap pattern that I've shown on here several times, this would be classic. What we need most aggressively is a move back above these highs at the minimum, or this high, and that's the 618 also. So you need to break above this. Break above that stuff, back up through 29,000, can take us up to 32,000, 34,000. Those are numbers that I've been talking about quite a bit. And this is the actual spot market instead of looking at the futures. Now, the futures are kind of open today, and we'll circle back and kind of look at what the ES and NQ are doing toward the end of this. But right now, we have total market cap down below the roadmap line. This is kind of bearish, and we have seen, let me pull this up really quickly. We have seen the the Bitcoin dominance go get up to 48. It was 48.5%. Now it's back down to 48.2%. We're seeing Ethereum at 19.5%. So the two of those together representing 2/3 of the crypto market. So that's quite a bit. I mean, that's 2/3 of the crypto market tied up in the top two. And the last 30 days we're seeing Bitcoin down about 1%. We're seeing Ethereum come down about 4.5%. So Ethereum losing a little more value over the last month. But like I've been talking about, Ethereum has a pattern that needs. It bottomed back in June and made a higher low in November and was kicking off an earlier pattern earlier. It started its rally earlier and needed a deeper correction now, and that's kind of what's playing out. That's as we flip back over to the chart and look at the Ethereum chart, we're seeing this possibly need a little deeper correction here. This thing could run on down just a little bit more. We kind of bottom right here near the 50, but we could reach on down into this $1,500 area right down here to complete this pattern, and that would look pretty good. And like I said, we actually started the pattern back here, so it could come all the way to 1,400 if this completed one whole cycle. We could come all the way back down to this 1,400 area to recharge Ethereum. So if you're not prepared for that on your positioning or whatever you're keeping up with for crypto, Ethereum could use a little deeper pullback. The Bitcoin and Ethereum cycles are a little bit decoupled from each other. So Bitcoin actually did bottom here in November and has rallied pretty strongly from November up through the current high. And we've come down, not really getting near this 50% retrace. So I got tons and tons of fibs on this chart from all the different swings. But that same support, if we did the same move that Ethereum's kind of tracing out there, we'd have to move all the way back down to this $22,000 area, possibly 23. And I mean, it's not out of the realm of possibilities. So when we look at that kind of move, though, that makes it kind of a corrective move up. One big move up, a retrace, one big move up, a retrace. If we came back down here, that's starting to look like a three-wave move up, and we could see an extension lower in Bitcoin, which doesn't really jive with the way everything's looking right now. So I'm not sure that that's the operative way to look at it. It looks like we had kind of a 5-wave up and a big fast retrace, and potentially another 5-wave up and a big fast retrace, which would kind of nest up this situation into a 1-2-1-2 type thing and create a measured bounce setup, just moving off of this low from March up into this high from April, and now we've retraced here into June. May and June, kind of 2-month retrace, a little slower than this nice little fast one back here. And if we look at that one, it's very technical this morning because we don't really have any fundamental stuff, but we hit a 50% retrace there and a 50% retrace here. If the same kind of move kind of develops or transcends out of this move right here, we could see Bitcoin up into the $36,000 area relatively quickly. I mean, that could happen by July if we did the same kind of move out of this low right back here. Now, we didn't go extremely down. We didn't get that extreme down flush like we saw back here. So this being a little slower, we may see this go a little slower, and it may be August or September. Now, we are working toward a halving event, which reduces the supply coming into the market. That's going to be somewhere out here in March, April of 2024. So we're inside that 12-month window where Bitcoin tends to kick off a rally. Now, if you're like, JT, I'm not really sure what you're talking about, let's pan back over here and look at this right here. This looks a lot like what we got going on here. We made a bottom right back here in December of 2018. Kind of rallied up, made a sharp spike up, and then got a nice sharp retrace, almost the full move. And then we went into the halving event. And then Of course, it was nothing but straight up right into that halving event. So we saw some volatility into the halving event and then straight up move. Now look, we got another one here. Let's zoom it on back, scale it back. We saw a big low. Here's our halving event. We saw this epic pullback pre-halving, and we saw this nice big run into the halving, a little bit of very volatile, nice big pullbacks and stuff. And then we had the halving event, we got a little pullback, and then it was a launch off. I mean, look at that. And then we got a pullback again into that low. So this happens every single one of these halving cycles. And here's another one right here. Look, same sort of chart. A big spike, big dip, rally into the halving event, win a volatile, get some spikes and drops, and then you know what? We go boom up to new all-time highs, dwarfing the previous high. Happens every single time. And we had the Genesis block back here. So this has happened every single cycle, about every 4 years, which is the way that the blocks work out. We mine a block of Bitcoin about every 10 minutes, and that makes it, since it's flexible, it's not exactly 10 minutes. It makes these halving events occur about every 4 years. It's not like clockwork. It's not based on a date. It's based on the blocks. And so here you go. This is what I expect to occur after the next halving event. Some kind of rally up into the halving event, some kind of volatility at the halving event, just like we saw. We saw the dip before in 2020, back here in 2016. We saw the dip after. We saw the spike, just right into the halving, and then we saw the epic run. And that run took us way up there. We went from a price around $200, and really in the lows we were, right around $200. So we saw prices go from $200 up into $20,000, right near it, like 16, 17, 18, oh, right there, 19,000, and then we came all the way back down to $3,000. In that 2019 low, and then we rallied up into the halving event, right around $9,000 at the halving, and that took us up into the most recent highs, which we saw up around 60, 65, almost $70,000. But then we came all the way back down, making the low in November, around 16,000. Now we're sitting here at 26,000. So what do I expect to happen over the next few months? More volatility. We'll probably make some spikes. We may make a nice big shot up here toward the top of this box. Then we'll probably get some sort of pullback right into the halving. It may happen before. It may happen right at the halving. And then highly likely, based on this occurring like 3 times before, 4 times before, we'll see a nice large rally after the reduction of supply. Now, what do I talk about the reduction of supply? Well, right now, Bitcoin, when you mine a block, you get paid 6.25 Bitcoins when you're the one who guesses the block. And that payout rate is going to cut in half and be 3.125. So mining instantly gets way more expensive if you want to look at it, or the reward gets way less. So a lot of companies mining as many Bitcoins as they can right now, trying to catch as many blocks, solve as many blocks as they can between now and next March. We're getting to be where that's only about 9 months away. So the more blocks you mine here, the bigger your payout. Anything after here is only 3.125 Bitcoins per block. And then about 4 years out from that, in 2028, we're going to see it drop down to, what does that get to be? I guess it's 1.0625 or something like that, or 1.625. Less than that, 1.5625. Yeah. 1.53 divided plus the half of 1.125. So yeah, 1.5625. So that's coming up in 2028. So the supply of Bitcoin hitting the markets is very quickly going to diminish, and it's going to take about 150 years to get all the rest of the 1.6 million Bitcoins mined out. You might be like, 1.6? What are you talking about? Well, right now, the total supply, which has been the way it is since the beginning, is about 21 million Bitcoins, and we've mined about 19.4 million. So we have about 1.6 million Bitcoins left to mine out, and that's going to take about 150 years. So if you're worried about what happens at the end of mining, it's going to be like 150 years from now. So we've got a ways to wait on that one. What happens at the end of mining, we'll see. Now, I spent a lot of time talking about Bitcoin and how it works and why it works. And Ethereum is proof of stake now. It used to be proof of work. We used to mine blocks, but now it's just you have to hold Ethereum as a validator. So you hold a chunk of Ethereum and you validate, and they're actually burning Ethereum at a greater rate than they're producing it right now, even though when we look at the coin market cap, it shows that the Ethereum supply is unlimited, and we have 120 million Ethereum on the market. Right now, they're actually burning it at a faster rate, but they can change the code at any time and create and go back to an inflationary type environment. So if you look at it, Ethereum has 120 million, whereas Bitcoin's only going to have 21 million. That's a lot of liquidity, and the prices are probably never going to be up nearly as high with that much supply. But I mean, maybe it could go higher, but I don't see it as ever going. This may just stabilize somewhere in the middle here. Now, if Bitcoin does go on a crazy rally, then Ethereum likely to hang in there at the same kind of ratio for now until something else alters their relationship. They've kind of been in this 40-20 relationship for a long time, although Bitcoin's popped up to 48, taking over almost half of the crypto market in market cap. So things are always subject to change. This is a highly developing situation, and if you're worried about the legal situation in the market with crypto, let me pull up one thing. I need to quit saying I have this that I brought to talk about right here. So look at this. Everybody was worried last week about, oh my gosh, SEC sued Binance and SEC sued Coinbase, and there's an injunction to shut down Binance in the U.S. Well, guess what? We've come down through here, and the SEC lawyers concede in court, this was last week, when asked by the judge, they had no evidence suggesting that any such thing had occurred as what they filed an injunction, against Binance for doing. They had no proof, absolutely no proof. So they filed an injunction to shut down Binance US and essentially take all their assets when they had no proof that they had done anything, any kind of funds mismanagement. So the SEC and Binance US have already reached an agreement. This was the news, or supposedly the catalyst that caused Bitcoin to do this last big drop. When we zoom up here, this big drop right in here was supposedly on that news, and it's like a nothing, like no big nothing. I mean, the SEC just throwing that out there. It's like they wanted to push it down to help somebody buy some or something. I really don't understand. And their lawsuit against Coinbase is like frivolous too, in my opinion. A lot of people wondered, they were like, why aren't you more concerned about this? And it's just because this stuff keeps happening in crypto, and it's ridiculous, honestly. So if we can break out of this in Bitcoin, that would be awesome to see. we could see this rally very strongly. We're really close to getting that kind of breakout above that trend line. So I'm actually going to set another alert for my own personal benefit. Now, other cryptos look pretty dang horrible. Like, look at this. Ethereum Classic right here. Horrible. Ravencoin. Pretty horrible. Horrible looking charts. Dumpster fires of charts. Ergo. Really horrible. Flux. If I put these in log, they look even worse. Flux. Consolidating at the lows. ADA. Made the lowest low right here. That looks like it can extend lower. We're seeing a lot of this. Now, the SEC did kind of file and say that it thought a lot of cryptos were securities based on the way they operate. While that may be kind of true, I mean, you can't just... Gensler's on the record as saying that Bitcoin, Ethereum, Bitcoin Cash, and there's a few others, he said definitively that they were not securities. They were more like commodities. Now, this is an interesting one here also. Let's just remove these things here. I wrote on here, and Matic, right here, despite getting slammed down pretty hard, actually has kind of a measured bounce setup cooking. Now, it did ruin this one that I'm removing all the notes on, but we have a low back here. We have moved up right here. We've come down to the 786. This is pushing the limits of my measured bounce, but as long as we start making positive progress, moving up through 70 cents again, this can lead to a much bigger upside pattern. Much bigger. I need to adjust this level and adjust this level to there. When I say much bigger, we're talking up here around $7. That's like a, from this level, we're talking like 12, 13 times your money. Now, would I buy it now at 60? No, we need it to move up and prove it. Getting above 70, which would be more like 10 times your money. But, it's holding a rather bullish pattern, actually. So, despite a lot of cryptos looking pretty horrible, this one's holding up even though it's way down. It's not looking at all like Bitcoin and Ethereum, but this one has potential to turn around. So, other stuff like SHIB, I mean, look at that. Ouch. Probably going even lower. Uniswap still looks pretty horrible. Didn't make the lowest low, but that's a pretty garbage looking chart. Litecoin, this one's holding up, and this one does have a halving event itself in August coming up. So this has actually got a rather bullish pattern, nested bullish pattern up off this low that it made back here in June with Ethereum, and it's kind of outperforming. It's pulled back in a way that sets up another measured bounce type setup right here and could extend. And here's my targets right here, 105, 115-ish, and 130-ish right now. I don't have those fibs drawn on here, but that's what I'm looking at right now on Litecoin. I do hold some Litecoin. Mana, again, this one looking pretty horrible. Anchor, I don't usually run through this whole list during these morning monsters, but we're going to kind of run through these. And Anchor above 6, but it didn't. It went all the way back down and looking pretty horrible. So this could set up some sort of inverse head and shoulders situation here where we kind of bottomed out. And if we make another higher low and come right back up like this, this one's kind of deep, but it could work. This one's still the tallest. And that could really launch this off. But right now, looking pretty horrible. And if we go lower low, that completely blows that pattern. So I do watch lots of these stocks based around crypto also. I mean, look, here's another one. Making a lowest low and looks pretty dang horrible. But Rose, on the other hand, actually has a nice 3-wave retrace and holds up the proportions here. Holding the 786. Moving up in a constant way off of that spike down, and this one could in fact set up a pattern to go up here around 16 cents. That's from right around 4 or 5 cents up to 16 cents. That's not too bad. I mean, that's looking like 3 times your money. It's not a huge pattern, but I own some rows on this potential pattern. Now, another one looks pretty horrible. Crow, look at this. Crypto.com's coin going in the garbage. And now Binance, when they got hit by the SEC last week, they took a giant pullback. And this one may come back up. This looks kind of corrective and sideways. And I'm not sure that immediately it's set up to do much. If we go off of the high, back down to the low here, we're having a little trouble working up through this stuff. The 618 definitely way up here, and it's got some work to do. In other words, moving up off this low, we're just kind of holding the 786. This could be a measured bounce setup, but it may have opportunity to go again, but it's going to take some work, and that would just put it right back up toward the prior high. If this is actually somewhat of a long bullish setup, but it looks like sideways garbage to me, just gonna continue churning off sideways. There is opportunity for it to start breaking out. If you break up through 360, then the upside's looking likely, and probably go find resistance at that prior high. But right now, it's just kind of churning a little bit. And one that I do like a lot. Look at this one. This has been super bullish lately, and continues to be pretty bullish. Looking for a move up to about, let me zoom it up so I get the right number there, 5 cents off of this current 2 cent area. Yeah, this one's holding fairly well so far. We start breaking below the roadmap line, a little cautious, back below 1.6 cents. But right now, that's kind of set up to go up to this 5-6 cent area, 5 to 6 cent area right up in here on COSPA. So nice bullish potential there, whereas a lot of other cryptos not looking so bullish. So do I see a power play coming soon? You go check the chat and Discord for power plays. So TRX USD, let's check out where that falls in the list here. TRX USD, Tron, yeah. Number 9. It's looking pretty horrible the last day. Last 7 days looking pretty not great. Last month looking just sideways and choppy, and the last year just sideways and choppy, not really going anywhere. So let's go ahead and pop it up. TRX USD, and just grab Binance data, and yeah, just kind of sitting. Then has a kind of a downtrend cooking. Now it could have broken through the downtrend, but that's not very aggressively bullish on that breakout. That can do this number right back here. Now, why do I say that right there? Well, look at this. See what we did after we broke out? We went right back and tested the trend line on the S&P 500. It's a very classic type move. We break out of the downtrend, come up at some point, then come back and test the downtrend. So, classic move would be to come back and test the downtrend. That could put it at a lower low. Lower than we saw back here in November. Do I trust it? No, not really. And the prevailing pattern so far looks like that right there. So we did have a low right back here in June, and we've not really made significant progress off of that. So you read that some crypto guy says he sees a 45% drop. Thoughts? Drop in what? We have 26,000 cryptos. What are you talking about? Dropping the market cap, dropping Bitcoin, dropping Ethereum, dropping what? I follow this stuff quite a bit. I mean, you can see I have a bunch of charts. I update these every single week. I think we've already gotten a big flush out. You know, altcoins are going to flush out. Like, there's no reason we have 26,000 coins. I mean, this is kind of ridiculous that we have 25,835 coins listed on CoinMarketCap. There's probably another 2,000 or 3,000 that exist outside of that. We have 643 exchanges. If you're like, JT, what's the best exchange? I don't really know because there's 643 of them. I use about, I don't know, half a dozen. I use Coinbase. I use Tastyworks. I use Robinhood. I use Webull, although Webull's going to some weird different situation. Use Crypto.com. I use then I have some off exchanges. So do I see Bitcoin and Ethereum dropping 45%? Probably not. Not from these levels. That doesn't really make any sense at all. Like, why would it do that? It's a crypto bear. Could it drop on down a little bit? Yeah, it could drop a little bit. We have major support right down here, like I talked about already. Yeah, it's like a 15% haircut. But if we break out through the trend line, we're more likely to go up than we are to go down. This is already flushed out. You got BlackRock dumping however many billions of dollars into their ETF. You know, Ethereum's on a different path. It can get this haircut right here. That's probably going to take it down to, you know, could take it 20% down. I mean, 21%. We could very well see Ethereum drop while Bitcoin rallies also. Bitcoin breaking out here probably has about a 22% upside. Only makes it a marginal higher high than we saw back here. That's the highest likelihood price right there, 32.6, before we get another pullback. Now, interestingly enough, I said I'd mention this on NASDAQ. Look what happened. Look at what played out. Let me load a different chart here really quickly. Let me load a different version than my NASDAQ chart. Look at this. We had a head and shoulders pattern on NASDAQ off the lows. It was kind of sloppy, wasn't very proportional, but we played out right exactly to the head and shoulders pattern right there on Thursday, Friday. Isn't that fascinating? So NASDAQ played out the head and shoulders, and we could see a nice big fat retrace on NASDAQ. So been kind of watching this because it seems like that NASDAQ is kind of lagging crypto market. You know, we saw crypto do that exponential kind of move up, and then we've gotten a big retrace for a couple months now. That could be what NASDAQ does. So crypto can entirely be leading the market, and we see a rotation back out of big tech into other things. And right now the play seems to be to quit shorting software and to short telecoms by hedge funds, and to go long software now. So seeing a little bit of rotation into NASDAQ, but we could see a pullback. Entirely possible. So it was very exponential and FOMO-y. So highly cautious. I've been beating the drum for a couple weeks now that we could see a large pullback in NASDAQ. And I maintain that we are up here at resistance. And funny enough, that high comes out to be about where the high was from March. Even with the contract rollover, that puts us just about 200 points higher. Be careful. So, you know, Ethereum, and anybody got any other favorites? Like GRT has a nice bullish pattern going right here. We had a big kind of 5-wave-ish up. Didn't really get much of a 4, but we have retraced back to held the 786 very well. This kind of sets this up to be a bullish pattern. This was kind of an AI-ish type play. Sets this one up to rally up into this 50-cent area right in here, potentially, on the next move. We do have some resistance right here where it consolidated on the way down. And a breakout above that prior high at 20 cents, probably going to set this up to go to 50 cents. And right now it's at 10 cents. Although I would not buy it now, it can continue to drop. You know, you could lose 50% of your money dropping to the lows, returning to the lows. If it starts breaking up above like this 15-cent high right here we made just a few weeks ago, highly likely that we're at least going to rally up and test that prior high from back here in February. And if we can break above that, probably going to go up to that extension at the 52 cent area. The other stuff like Bitcoin Cash doesn't look as awesome. I mean, getting crushed. And Hex looks really bad. Look at that. I mean, ouch. That one's just like, where's the bottom? You know, shipping, another one that listed on Coinbase, looks pretty horrible. You know, continuing to get crushed. So you definitely, this is definitely a picker's market. Now Render right here, holding above the roadmap line. This is constructive for continuing to push higher. You know, what kind of push higher are we talking about? Well, this one doesn't have a large retrace, so we're just looking at the roadmap pattern. Roadmap retrace puts us back up to about 327, you know, possibly 369 before the next retrace. Tighten that up just a little bit. Yeah. So just the same patterns I always look for. This one, you know, we did the pullback and the extension right there on the prior move. Right here, did the pullback, extension right out to the 1618. Perfect. So this one can rally right up into this 327, 362 area and do another pullback right to the roadmap line. So that one just doing the pattern. So there are opportunities. There are like completely horrible looking charts out here. XMR, the one major, if you want to call it major, one major crypto that all your transactions are kind of untrackable. It's all encrypted transactions. This is the money of the black market, if you will. I mean, if you really want to hide your transactions, XMR is the one you go to. This one's looking kind of corrective right now. That's a three-wave-ish move up off the lows. One big up, one big down, one big up, and one big down. If this goes lower low than the low back here from November, that one can go lower. If we actually break it back above the high, this could be a nested 1-2-1-2 type setup, and we could go higher. But the proportions are all kind of messy right now. This move down has pushed us to the limits of the 786. We start breaking back above the roadmap line, back above 155. That could extend, but not so sure. And this one's harder to buy because of the anonymous nature. You have to go off exchange, off of the KYC exchanges. So that one could rally up to 240, but I don't know. Not so sure on that one. Not high degree confidence. Now, some of the other stuff that I keep up with, like Mora, just been parked on the top of the roadmap line, just consolidating. Not really showing it's going to do anything at all. It's just churning. And people say, you know, JT, they ask me all the time, like JT, you know, Mora, crypto miner, you know, Bitcoin exposure. Well, they hold a lot of Bitcoin, but the miners in Bitcoin don't act like the underlying. Just like in the gold market, the actual gold to metal, gold miners don't follow the gold chart either. So Riot does have kind of a has a roadmap type setup. We came up just a little shy. That would put the next target up here around 15 to 18 on the next push up. And BTBT has been a rock star. This did a measured bounce setup back here, and the target is up here around 5 right now, and it looks like it may get there. So I bought this one at $1-ish. I got a few different positions. It looks like we're going to go up here to this 5. They'll probably do a retrace back down toward the roadmap line, back down in this $2-3 area, and then this kind of sets it up for another bigger move, potentially. Have to draw in fib, that move, and then back down to here. That could set it up for a move up into this $20 area, $20-$30 area on the next push up. Maybe like, holy cow, that's ridiculous kind of numbers, but that's the kind of thing that I'm out here chasing, looking for patterns. And that could be back to the all-time high here for BTBT. All right, so there's a few of the opportunities out here. MSTR holding the roadmap line. The next extension higher would be 365, 392-ish. And coin, just looking pretty sloppy. It's down here under the roadmap line, consolidating, even though they got, hit on some regulatory news right there, big drop, they're coming back up, and it's just a sideways churn. I mean, that's what I've got right there. Sideways churn. PayPal, despite their attempts to get into crypto and stuff, still looks like a pretty bearish pattern. And this did the market roadmap pattern down, like bounced off the roadmap, got the extension to the 1272, retracing back to the 100% there on the point from where it broke down on Friday. If we hold that area, hold the downtrend line, it may come back and test that downtrend line. We could see an extension down to 53 on PayPal. Still looking pretty bearish. Now block over here, trying to be into crypto. A break above the roadmap line could indicate that this was the bottom. A bounce down off of that roadmap line could take us down to 40 on Square/block. A breakout could take us up here to this $120 area. So breaking up above the roadmap line, then above these prior highs, could take us up to 120. So that one's kind of a little bit of a coin flip at this point. Do we hold resistance and drop, or do we break out above resistance and rally strongly? So there's some of the opportunities. NVIDIA, of course, reaching extensions. Unless you just haven't watched anything of mine recently, this one's ridiculous right now at like 39 times sales, and highly likely to experience some sort of massive pullback. The upside, it's like the rule of large numbers. They need to start selling a lot more stuff to justify the price they're at right now. And if they don't, they're likely to experience a pullback. AMD did experience a large pullback back here, and looks like it may be working on another one after reaching some extensions. SMH also getting highly extended on NVIDIA, pushing out, and SOXL had a pattern, and we're playing out the first kind of level here, right around this $26, $27 area. An aggressive target would be 33, and the head and shoulders that set up back here plays out about 39, but I caution that leveraged instruments don't always play out to their targets exactly. So, all right, that's kind of gonna wrap it up here this morning. Hope you found something useful, and I'll be back again tomorrow. I did mention I would go hit up the S&P 500 real quick, since we're on. Let me grab the Morning Monster list. S&P 500 right there. We are moving a little bit. The futures market is open today, but that's looking corrective. Corrective down. Be careful. This can continue to do the bigger retrace. We'll have support right down in this area. We start breaking through that 4,400 level. Probably going to break on down. So we have probably going to come down here and at least retest that consolidation right there. Consolidated before the pop, and then we break down below that and we can get the bigger retrace. So NQ, like I said, that one's kind of doing the same thing. We start breaking below this low, probably going to get a bigger retrace, and the support is kind of like this on NQ, about like that. Start getting below that 15,000 level, probably going to go deeper. So oil still trying to break out. Gold consolidating a little bit. We break back above these highs, it's going to go on the next run, and that's pretty much the outlook. So come back tomorrow when the market's actually going to be open, not just the futures and cryptos, and I'll see you tomorrow. Thanks for watching, everybody. Bye for now.